Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. Clearly, if you see in terms of the markets, an interesting move that we're seeing declines pretty much in favor of the bears, and the markets are, after opening at around 19,600, hovering around those 19,530 levels. Bank Nifty as well, a cut of almost around 300 points coming in there. But a lot of stock specific action is what we are seeing right now as we speak. Joining us on the show to discuss more is Mayuresh Joshi. Mayuresh, good morning and welcome to the show.
Morning, Adam. Pleasure to be on your show, as always.
Always a pleasure to speak to you. Likewise. My first stock coming to you is a Hero Moto. Company will be reporting numbers today. Though there are some, headwinds from a compliance perspective that the company has been facing. What's your view and what would you advise investors to do?
Oh, absolutely. I think a few compliance issues cropping up suddenly for this stock over the last few days. But the new launch that they're probably doing in Harley, the kind of bookings that they received, 25 odd thousand, very reasonable and a decent price point, means that the kind of demand acceleration that you're probably seeing probably persists. Just a comparison stack up between Hero, Bajaj, TVS. I think Bajaj and TVS have done exceptionally well over the past few months and quarters. Hero is probably doing the catch-up trade at this juncture, both in terms of new launches that are expected to aid and accelerate volume stroke value growth. And at the same time, I think as the rural economy recovers, few key launches in the rural side, specifically between that 150 and 350cc segment, where a large chunk probably resides, and the export markets that they're probably looking at, with more EV launches expected to come through. I think exciting times for the two-wheeler and four-wheeler space. So I'll wait out for numbers. Numbers expectation obviously is a little bit stronger this time round. But yes, I think anybody holding the stock can hold the stock in view of any of these developments.
Right. Moving on, Z Entertainment reported numbers, plus you have the NCLT hearing today as well with regards to the merger. What's your view on the company and what should you advise investors to do? Do you think a good time to enter taking where the valuations are?
Probably valuations at the right place, but what happens on the NCLT part is something that the street would like to watch out for. At the same time, you've probably seen some demand acceleration happening specifically as far as the ad revenue growth is concerned. For most of these counters, Z, Sun, including the likes, subscription revenue still remains a little bit sticky. The OTT-led businesses are in the stages of recovery, but not a complete blowout recovery as one would expect. So for Z in particular, if you ask me, I think would wait out for how the NCLT probably order probably comes out. Valuations, no doubt, are very, very attractive at this juncture. But waiting for the order and then probably take a call would be a far better and the safer approach.
Right. Mayuresh, what do you make out of Dreamfolks? Interesting to see how the stock has tanked in today's session as well. How are you looking at the earnings and the company?
So a clear case of expectations which were absolutely a mismatch. So I think what they delivered a few quarters back and the kind of margin deterioration that you probably witnessed in this quarter is something that has spooked the investors. Obviously, I think all the macros that surround the stock in terms of the accessibility to lounges that they probably have, the kind of expectations that one lays out, both in terms of credit cards, issuances, and a lot more coming in terms of both airports, greenfield and brownfield, more lounges coming through, and therefore more customers coming their way. I think the macro story probably remains structurally well poised. But I think the numbers is something that disappointed the street in a significant manner. I think the street was not in a position to see and witness the kind of margin deterioration that has probably happened. So I think let's wait and watch. I think it's been a significant price damage onto the stock. The RS ratings for this stock has taken significant hit as we see from Mark Smith. So let's wait and watch on this one. Not be in a hurry to probably get into the stock. Right?
Tasty Bites, a strong move coming in today's session on this name. How are you looking at this counter?
So it's Tasty Bite that you spoke about?
Yes.
Okay. I think the numbers were fabulous. So I think if you probably look at the YOY and the quarter-on-quarter performance, I think the numbers were really very good. And it probably indicates that if the company probably manages to perform in the manner that it has done in the next few quarters, we've obviously got a lot of festival the festive season probably coming on. And I think the volume growth should be very, very reasonable in the second half as well. So going by what the first quarter has probably delivered in comparison to the previous 2 years, I think if they're able to maintain their earnings growth in the manner which they have done, second half will be even better, which makes it a strong case for investors who hold this stock continue.
Right. That's with regards to Tasty Bites. Moving on, FDC reported a good set of numbers. Along with that, they've announced a buyback as well. What would you advise an investor to do with the FDC?
Again, a strong set of numbers. Along with that, I think the buyback announcement is something that is being taken very, very positively. The best part about the numbers, Hiral, was the massive margin improvement that you've probably seen. So margins have now jumped in excess of 23 odd percent. Even if you assume the margins to probably normalize and get back to that 20-21% band, I think it will be still relatively better than what this company has probably delivered on the operating front in the previous few years. Having said that, I think both the export formulations and the API business seems to be on a very strong ground. It's a lesser known stock that is probably spoken about. But I think earnings growth, bottom line growth, both EPS and the RS rating on MS Market Smith probably look very, very decent. And therefore, anybody holding on to this stock can continue.
Right. Sunbank is an interesting one to watch out for as well. A loss of around 6.5-7 crores is what they've posted. The fourth quarter itself was also weak for the company. And overall, this is coming in at a time when you're seeing some strong numbers coming in from real estate players overall. What's your view on a Sunbank?
So to a large extent, I think Mumbai-based realtor has quite a few good projects which are going on. The demand is strong for a few of their projects as well. But unfortunately, I think the stock has not moved as much as its peers had done, even in the previous few months. Obviously, I think numbers for the space in general, Hiral, if you see, have been a little bit sticky, except a few companies. Even Oberoi Realty had some sort of a margin miss in the quarter that they probably reported. To a certain extent, South-based companies have reported decent set of numbers, and their expectations, both in terms of new launches, so the sales velocity as we speak, should probably improve going forward, as well as their existing inventory should probably at a far more reasonable level, which means that the expected cash flows that come through from sales of their existing inventory and the new launches that they're probably doing seem to be on a much better footing at this juncture. So in my sense, I think it does make sense to probably look at more of these South-based players. Sobha, Prestige even has a little bit of the annuity aspect to it, with a lot of corporates taking up spaces, leasing new spaces at good rates, and expectations of more leasing activity to continue. I think it's a perfect blend of residential, commercial, and annuity business as well. So I think focus on the South-based players, I think, in a better position than a company like Sunteck.
That's an interesting take with regards to real estate players. Brigade and Prestige also were the ones who reported numbers in the last 1 to 2 trading sessions. Moving on, Granules is an interesting one, Mayuresh. The paracetamol maker actually has seen a major hit in terms of profitability, a 62% downside in the first quarter numbers. And what they've said is that it's the cyber attack which has disrupted business this time around. Taking that into consideration and the way the stock has moved in, how are you seeing the future, and what would you advise investors to do?
No, I think it's a wait and watch. I think there are far better stories within the space that we probably like at this juncture. The large cap names on our global focus lists remain with Cipla. Extremely strong set of numbers. Margins expected to be at 23%. And yes, they did receive an OI as well. But large expectation is that the launches should come through in the next few quarters. And as these specialty launches come through, I think the margin maintenance should continue for Cipla. Similarly, with the case of Dr. Reddy's, biosimilars expected to get launched over the next few quarters. A lot of their molecules will have backward integration at their facilities as well, which means margins should get protected and show significant signs of accretion and improvement as we move into the next few quarters, thereby implying that earnings growth should continue for Dr. Reddy's. PSAI business is showing signs of stability, and therefore margins along with key launches expected to come through specifically on the biosimilars and the injectables part, should prop up and hold out the earnings and margin profile as far as our markets with ratings and ranking are concerned. So yeah, better to look out for leaders within the spaces, leaders like Cipla, opportunities can do it.
Right. Moving on in terms of paint companies, seeing the way crude has been panning out now, what's your view on Asian paints? Clearly, when we had a couple of managements as well, clearly the indication is that the second quarter is expected to be very similar to what we saw in the first quarter. But probably from the third quarter onwards, we will start seeing double-digit volume growth. Taking that into consideration and the valuations as well, how would you look at paint companies and specifically Asian paints, which is trading under pressure today?
Second half should be relatively better. Absolutely agreed. I think as the festive season comes along, volume growth should pick up quite significantly. And with that, I think the expectation is that double-digit volume growth should continue for the industry as a whole. Having said that, I think the input costs with crude starting to move higher. Obviously, crude derivatives, specifically titanium dioxide, should show signs of some element of stickiness at this juncture. But chem companies can very well pass this through, and even if it's a marginal pass through, I don't think it will create a significant dent as far as demand is concerned as the festive season comes along. And therefore, I think volume-led value growth should lead to significant operating leverage on these companies. Asian Paints valuation definitely on the higher side, always has been. But I think paint companies are in a sweet spot. My personal view is that crude should not move significantly higher from where we are at the current juncture. You're obviously talking about demand factors specifically in the West expected to turn soft as we move into the next few months. And therefore, I think crude might probably top out at these levels or a little bit higher than this.
Right. Moving on, the last pack I want to discuss with you, Mayuresh, is the IT pack. It's interesting to see how Tech Mahindra is making a good recovery because it seems that there's some buying interest coming back in technology. But Mahindra specifically is the one which is standing out. What's your view on this counter?
So, what is probably transpired in the West, I think, with banks downgraded at this juncture, I think the risk element comes back onto the table again. How much is the spending expected to come through? Will discretionary spending take a hit as we approach Q3, Q4? And with banks and the recessionary conditions expected to play out both in the West and the European zone as well, will retail manufacturing take a fair bit of a hit, which means order inflow and order activities start tapering off. To that extent, again, I think it's a wait and watch for most of these companies. Technically, yes, I think it seems that they have bottomed out, but a lot of these factors are at play. And what we've seen in the past, Errol, is very, very interesting. I think as we approach Q3 and if macro conditions start worsening a tad bit, I think the guidance numbers start changing as we approach Q3. I think that is a risk factor that the markets are probably bracing themselves for the IT pack as well. A few of the mid-cap IT companies, to be specific, ER&D companies like a KPIT, Sonata, have done exceptionally well. So I think somewhere, the valuation mismatch is huge. They are in late-stage basis as we see at market smith as well. And therefore, I think if there is a correction in these mid-cap counters as well, there will be valuation comfort and an entry point comfort as well. So I think you'll have to take IT companies with the kind of development that happened in the macro and the micro scale over the next few years.
Right. So I think that's going to be an interesting space to watch out for as well. Thank you, Mayuresh, so much for joining us on the show and sharing those views. So those are a few of the names, that are seeing some bit of action in today's session. And clearly, if you see in terms of markets, almost 100 points cut is now what we are seeing now in terms of Nifty 50 as we speak, and the 300 points cut coming in terms of Nifty. Clearly, Adani Enterprises, Adani Ports, BPCL, ONGC, as well as M&M. These are few of the top gainers today, whereas on the losing end, you have Asian Paints, which is seeing a clear impact in terms of higher crude prices, which are almost at a 10-month high. Tata Motors is seeing some cuts. ICICI Bank, Nestle, as well as Abata, Britannia, I beg your pardon, is under pressure. It's the FMCG pack, which has seen a good move over the last couple of trading sessions, is seeing some bit of profit booking that has started to creep in as well. So that's what the markets are looking like so far. In fact, that's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned.